This is Alan Bush with ADMIS with the Financial Futures Forecast for Tuesday, May 12th. Starting out with the stock index futures, we are seeing prices lower this morning for a couple of reasons. Number one, we are seeing European equities under some pressure. Also, we are seeing the bond market weaker. So for those two reasons, we are seeing weakness in U.S. equity markets this morning. However, I think there's a very good chance we will see at least a partial recovery later today. Even though long-dated interest rate markets are under pressure, the short end of the curve, we think, will probably hold up relatively well, as the Fed is likely to raise interest rates later rather than sooner. So from here, look for at least some recovery today. Longer term, still looking for higher prices for all of the major stock indices. Now, moving over into the foreign currencies, the dollar index under some pressure as flight to quality longs are being liquidated on reports that Greece now will be making a $750 million payment to the IMF. Also, we are getting close to new lows for the move, so there may be some sell stops building below the market. Still feeling longer term that the dollar index is likely to work lower. This is a trend that I think will last for quite a few months. Also, the euro currency higher on news that there apparently is a better relationship now between Greece and the IMF, with some loans being repaid today. Also, we are seeing gains in the British pound. This after economic data from the UK showing better manufacturing numbers, and the Australian dollar showing good gains as home loans in Australia coming in stronger than expected. Not to mention commodity prices firming up today, which helped the Australian dollar and the Canadian dollar. We continue to feel that the Australian dollar and the Canadian are the best longs, as we do believe that major industrial commodities have bottomed in price. So those two currencies should be the leaders to the upside. We also think that the dollar index, as we mentioned earlier, will probably remain under pressure longer term. Now, moving over into the interest rate markets, some severe pressure in the overnight trade due to rising bond yields in Europe. A lot of supply this week from the U.S. Treasury. Also, a lot of European supply also pressuring credit markets overall. Also, some flight to quality longs being liquidated in light of the Greek repayment to the IMF. Also, we are seeing a lot of analysts now becoming extremely vocal in their bearish outlooks for the credit markets, which is a sign that we may be close to a bottom now, when there's so many analysts now becoming so bearish. Overall, though, I think I would stand aside in the credit markets, focusing on the long side of stock indices, the Canadian dollar, the Australian dollar, and the short side of the dollar index. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.